Michael says, hey guys, I'm an avid listener of your podcast, and I love the straightforward approach you guys share. I have a question as to what to do with my annual bonus of about $12,000 before taxes. It's going to get paid out at the end of March. I'm 32 years old. I make $125,000 a year, and between my Roth IRA and Roth 401k, which is invested into the S&P 500 and the NASDAQ, and my bridge account, I have $155,000 invested to build my base. I also have a $20,000 emergency fund and an $1,800 a month mortgage at a 3% interest rate. I don't have a car payment or any other debt. So here's my predicament. Do I just do the responsible thing and put all $12,000 of my bonus into my investments? Do I splurge on something a little bit? How much of this should I use for fun money? Would love to get your perspectives. Robert, you want to answer this one?
Yeah, I love it. And this kind of goes back to one of your themes, Austin, and that is you're 32 years old, you're crushing it, you're doing great, you've got your base built, you're really, really doing well. I think you should look at splurging on something. What better time than now to reward yourself for all your hard work, all of your educational stuff that you've learned, and really set yourself up from a literacy perspective with respect to your finances. So yeah, my opinion is it might be time to go ahead and splurge. Spend all of it, spend part of it, but reward yourself. You've done an incredible job. You're so far ahead of the curve. And I love hearing stories like this. So thanks for sending this question.
Michael, you have done a wonderful job. You're 32 years old. You've built your base. You've got $155,000 invested. You have a fully funded emergency fund. You have a low rate mortgage. You have no car payment. Like, you're crushing it right now. The world is your financial oyster, essentially. If I were you, I would feel as if you've been working hard, you're doing these things right, and have likely been for several years, maybe at the expense of a vacation, maybe at the expense of a car you really wish you could drive, maybe at the expense of something in your home that you just think is a crazy idea, like a $4,000 espresso machine, right? Like, I don't know what makes you tick, but I do know that you can get burnt out doing this sort of frugality stuff really easily if you don't reward yourself along the way. And I would imagine, considering how well you've done financially here at such a young age, you might be approaching what could feel like a burnout situation. So to Robert's point, I'm in total agreement. Take half of it. Call it $6,000, $5,000, $4,000 and take that dream vacation. Yep. Go on that really cool experience, or maybe go buy that thing that just never makes sense for you. But you know what? Maybe you're super into coffee. You want to get this espresso machine, or maybe it's like a hot tub. I don't know what you're into, but there's something I'm sure you've kept in your notes app for a couple of years now that's like, if I ever had the money, I would buy this because it really make me happy. That I think is what you should spend half this money on. And yeah, maybe the other half of it, throw it in your bridge account. Use it to max out your Roth IRA, whatever you want to do. You already know the protocol. You're very smart when it comes to money, but I do think splurging on something's a good idea, especially if it's going to keep you motivated for the next 12, 18, 24, 36 months to stay with it financially.
Yeah, I want to unpack this a little further because I love this question about splurging, because I feel, and I'm going to use a reference of one of my dear friends. He is unmarried, no kids, has millions of dollars. And when I went to his house the last time I was around in Ohio, this was probably 4 years ago, he had really old furniture. He had a terrible 15-year-old TV. He had a beat-up truck, all of these things. And I looked at him and I said, what are you doing? You have millions of dollars. You have nothing to do with it. Why don't you splurge? You've been talking about buying a nice boat. Get rid of your crappy boat. Get a real boat. Upgrade your TV. At least it'll cost you $300-$400. So when you're watching TV at night, at least you can enjoy it. So you have to remember, we're never going to be educating to just save, invest, and not enjoy life. You have to have balance there. Otherwise, what is the point? So I love this. I love this question. And just always try to find a balance so you're not just building your wealth for the future and not enjoying the present.
And my last point here is, when you do think through what that item or experience, specifically item, I guess, that you want to splurge on is, think about the cost per use, right? Cost per use. So for example, I spent like $2,000-ish buying a state-of-the-art, beautiful LG 4K QLED TV that's like 60 inches. I'm in love with it. I love it. I love it for movies. It's amazing. And I'm cool with that because I'm going to have it for like the next 5 or 6 years. I use my TV probably 3 to 5 times a week. I'll sit down, like just last night I was watching Love is Blind with my girlfriend. So it's like, think about cost per use. I'm okay with spending that much, knowing I'll only spend it every 4 to 5, 6 years, but I'll use it all the time. So don't like go buy something silly that you're never going to use. Another example of this is I just, bought a $4,000 couch. I've never had a nice couch. My last 2 couches were Facebook Marketplace couches. So now I'm like investing into what I want to be like an elevated new experience for my daily life is like I sit on the couch all day long. Like I need to have something good. So think about it like that perspective, cost per use. I think that's a very responsible way to think about splurging.
I love it, love it, love it. One of my big expenses is mattresses. I do not skimp on my mattress. I want to make sure that when I fall asleep that I feel like I'm at the best resort on earth, so you'll never see me skimp on a mattress.